All right, back to it now. I've been watching this. Have you been watching and seeing what gold is doing? Keeps setting records, $27.50 yesterday. Silver's over $31 an ounce. A lot of crazy things happening. I got a guy tell me the dollar's dead. He truly believes. I don't know if that's true. But Nick Hopwood here, leading his team of certified financial planners at Peak Wealth Management, working with clients in pretty much all 50 states. You can learn more about Nick at peakwm.com/Gruber, peakwm.com/Gruber. You can get a Social Security analyzed, no charge, all right? How about a Roth conversion analysis? It's all there. Nick's here with me. Nick, nice to have you here on the program.
Thank you, Steve. And hey, I want to check in before we get into the whole Roth conversation. I want to make sure you're okay. You sounded kind of upset about Denny's closing. Is that your go-to spot or what?
Well, no, White Castle, of course.
Okay.
Actually, there's not a White Castle anywhere near me. But these are just places, look, you go in college because it's the only thing open at 3 in the morning. You know, you've got, some crumpled up dollars in your pocket, so you stumble into Denny's or White Castle. It's just, we've all been there, for God's sake. Anyway, I understand you want to be known as Mr. Roth. Is that correct, Mr. Roth?
Well, in some circles, I love Roth conversions. I love backdoor Roth IRAs. I love maxing out my Roth 401k. Which is
I thought it was Hyman
$30,000
Roth, from The Godfather. That's what I was going with.
Yes.
But anyhow, fair enough, Mr. Roth. 401k rollovers. Look, a lot of people have their money tied up in 401k plans, and you don't realize that once you're over the age of 55, you can get most or all of the money and roll it into something else, like an IRA. Why would you want to roll it? Why wouldn't you just leave it where it is and let it do its thing? I mean, what do people need to know?
Well, as you mentioned, many people have a lot of their net worth tied up in their 401k and they're still working for that company and they think that the money's stuck. But oftentimes when you're over age 55, you can do an in-service rollover. And it's because you want more investment options. A lot of times your 401 has very limited choices. Not all 401ks are created equal. So if you're a do-it-yourself investor, you can roll it over to an IRA and have virtually unlimited investment options. If you're looking for professional guidance, the same thing applies. An in-service rollover, work with an advisor, work with professional guidance on your 401 into an IRA.
Sure. Now, you talk about options, but, I've learned this just this week, and you knew this, I'm sure. The Magnificent Seven, I think they call these big stocks. The Magnificent Seven, right? They have 40% of all the value in the market. 7 companies represent 40% of all the value in the stock market. So where is this diversity you speak of?
Well, in a 401, you might have 12 to 15 mutual funds to invest in, and it could be some large caps, mid caps, small caps, international, some fixed income. You're not going to have any opportunity to invest in individual stocks if that's what you're looking for. So you're relying on the mutual funds to give you access to, as you say, the Magnificent Seven, whereas if you had the IRA with unlimited investment options, you could buy stocks if you wanted to.
Yeah. So that's where the diversity comes in. That's important to know, because if you have the Magnificent Seven, I can't blame you for having that. But if one or two of those skin their knee, so to speak, things could get ugly. Small business owners, meanwhile, and many small business owners have no 401k plan for their employees or a simple IRA plan for their employees, which is not a good idea. Uncle Joe is covering the administration costs of setting up a 401k right now by way of a tax credit. Simple IRA, $19,500 versus $30,000 annually for a 401k. If you can afford to put that money in, you should do it, shouldn't you?
If you can afford it, you should. And think about this. In America, small business is the backbone, right? We all have heard that. But sadly, by some estimates, up to 75% of small businesses do not have any type of retirement plan whatsoever. So how are you incentivizing your employees to save for the future? And some people have simple IRA plans, as you mentioned, that's pretty good. But if you can have a full-fledged 401 where you have the option of pre-tax, Roth deferrals, larger matching contributions, and Uncle Joe is going to cover the startup costs, that's a pretty sweet deal. It's in the form of tax credits, and for folks who want to set up a new 401, it's that program is going on for the next 2 years.
Well, that's pretty good news right there. And health savings accounts, we've talked about this a lot over the last 2 or 3 years, you and I. Health savings accounts, triple benefits, triple tax-free benefits that you should lay out for the folks here. But the question I have after you explain it is, well, what happens when I'm no longer healthy, when I pass, when I die? What happens then? But tell me about the benefits of the HSA so people know, and then what happens when the next chapter comes.
Yeah, Steve, the HSA is the most underutilized triple tax-free benefit in the tax code because it's the only triple tax-free benefit where you put money in, you get the write-off, money grows tax deferred, and you have tax-free withdrawals when you're using the money for medical. And medical expenses are going to be hundreds of thousands per year for a couple. I'm sorry, hundreds of thousands over your lifetime for a couple. So we know that we're going to need money for medical. Now, here's the deal. When you die, it's a little bit different than an IRA or a Roth IRA. If I pass away and my spouse is living, it transfers right to her. So that's a good thing. So she's able to continue with the tax-free withdrawals. But upon the second death, this is very important. Upon the second death, the HSA ceases to be an HSA, and all of the money must come out taxable in the year of death. So whereas for a Roth, you have 10 years to draw that money out tax-free, the HSA becomes taxable immediately. So the planning implication, Steve, is that we want to actually be drawing down that HSA in retirement throughout our retirement years. We don't want it to have a big balloon payment at the end.
In the year of death, what if the death comes on the 31st of December? I mean, I don't mean to throw a curveball, but I'm going by exactly what you said. By the letter of the law, that would be a problem, wouldn't it?
Yeah, you're tripping me up on a technicality here, Steve.
That's all right.
I'm sure that my CPA can help us answer that question. But the
that's what we need.
Yeah, the spirit of the question is, instead of having money come out tax-free over a 10-year period like a Roth IRA, it comes out all at once, and you're taxed at
siphon it down.
Bracket.
Siphon it down is the point. I get it. All right, so the poll's pretty close, but right now, Donald Trump +2 in the brand new poll from the Wall Street Journal today. And it looks to me, and everything I've read, and you can tell me if this is right or not, the markets have already baked in a Donald Trump victory. The metal markets not so much, because gold seems to go up every single day, but the stock market has baked in Donald Trump to win. Is that what you are taking away as well?
Yeah, you mentioned the 2% lead in the Wall Street Journal poll, among others. And we have the poly market, which is hovering over 60% for Trump. And the stock market and the bond market are also signaling Trump. So one of the things that we look at is the concept of deregulation. So we know that Trump is all about deregulation. And who benefits from deregulation? It's the small caps. And so they've been running relative to other asset classes, but also interest rates. Isn't it peculiar that the Fed just cut rates, but the 10-year and the 30-year bonds, those rates are going up? It was not what we expected, but the bond market is telling us Trump is going to win, and there's going to be more economic growth with his policy.
And you're going to win if you get a hold of Nick Hopwood. PeakWM.com/Gruber. You get that free analysis of your Social Security. PeakWM.com/Gruber. Get a second opinion with Nick, or use that QR code on your screen for those of you watching. Nick,